Well, if you see, Brent Crude touched around $89.3 per barrel yesterday in trade, which is the highest level that we have seen for Brent Crude since October 30th, 2023. In fact, from 2024 lows, if you see, Brent Crude prices have moved up nearly 19%, just 1% away from being actually in a bull market for Brent Crude. Now, why this sudden rise that we have been seeing in the Brent oil prices? And that is because there's fresh supply threats that is coming in owing to the conflicts that we have been seeing in the Middle East. Apart from that, Ukrainian drone attacks have also the drone attacks in the Russian oil refinery have also renewed supply issues in the market, and that's the reason why Brent Crude has been gaining in trade. Now, what would be the impact of this on Indian companies? Well, it will be majorly negative coming in for the oil marketing companies, given the fact that recently they had reduced their marketing margin by around 2 odd rupees on both petrol and diesel, and given the fact that oil prices have been rising, this would further hurt their marketing margins going forward. Now, before they had taken a cut of 2 rupees, they were earning a marketing margin of around 7.4 rupees on petrol, which has come down to now less than 3.5 rupees, and on diesel they were earning around 3.4 rupees per litre, which has now reduced to less than 1 rupee for the oil marketing companies. And generally every 0.5 rupees per litre drop when it comes to the retail fuel marketing margin impacts Indian Oil Corporation, BPCL and HPCL's EBITDA by around 7 to 11 odd %. Apart from this, we have also been seeing a continuous drop when it comes to the Singapore gross refining margin, which is the Asian benchmark for GRMs. From January highs of around $8.7 per barrel, it has now come down to $4.2 per barrel, which is a drop of almost 50 odd % from its high. And generally, $1 per barrel drop in the gross refining margin impacts MRPL's EBITDA by around 1,000 odd crore rupees. For Chennai Petro, it lowers their EPS by around 30 odd % for Indian Oil Corporation, BPCL and HPCL. It reduces their earnings by around 14 to 16%, and for Reliance Industries, if you see, it impacts their consolidated earnings by around 4 to 5 odd %. So keep an eye out for this oil marketing and oil refining space, given the fact that oil prices are on a rise and gross refining margins have also been continuously declining.